Hey guys, what is going on? Welcome to the video. So in this one, we're going to take a look at what happened during last week's big drop in the stock market and what to expect next moving forward, along with some individual trade ideas for the week and weeks ahead. Let's go ahead and get into it, and as always, there are timestamps in the description. So starting out by taking a look at the S&P futures chart, for the last few weeks, we've been talking about this wedge pattern and the key trigger points for the trend. On Monday, futures had the quarterly contract roll from the September contract to December, which did make this pattern a little bit messier, but if we take a look at the September contract, this actually topped right at the trendline resistance of the wedge once again. When patterns are respected this well over a lengthy time frame, you will get a violent move once they break, which is what played out last week with a 200-point sell in the index once it broke to the downside of the wedge. So the big question now is, what should we expect going into next week? The midterm trend has now switched to bearish, but there are a few signals pointing towards a rally or extended bounce next week, which we'll talk about in just a second. So going into next week, the key levels and zones to watch: on the downside, this 43.50 to 43.68 zone that is currently testing is a major decision point. This is the bottom of the range and a larger breakdown trigger if it was to break below, and would likely result in a fast move down towards 43.05, which is the next key level below there. Resistance levels on the upside are now at 4400 to 4410, the trendline backtest at around 4430 to 4440, and then 4464 above there, which was the spot that triggered the violent sell last week on the break below, so buyers must reclaim above there to open up any real upside move potential. The main signal supporting a bounce or rally next week is how oversold this became last week, with the RSI touching below 20 on the 4-hour chart. This is the most oversold that has been since mid-2022, and for reference, below 30 on the RSI is an oversold signal. Also, there's some pretty big bullish RSI divergence showing up, as the RSI is making a higher low versus the price making lower low. Bullish divergences like this are strong signals and will often play out with a bounce or reversal. On the hourly time frame, it became even more oversold last week as the RSI hit 12, which is once again the most oversold since 2022, and is also showing larger bullish divergence here as well. For those who are unfamiliar with divergences, here's a little cheat sheet for it, which signals a bounce or rally to follow. The main bear case for the S&P is this pretty textbook head and shoulders pattern, which is testing the neckline at that 43.50 to 43.68 zone. The fact that this pattern has formed over a 3+ month time frame is a big warning sign, and the measured move for the breakdown would be about 280 points fully. So as everyone can see, there is a lot of conflicting information for the week ahead. We have those bullish signals indicating a bounce or rally, but also the midterm trend, the technical pattern, and just pure price action screams downside move. So because of this, I'm going to have a very loose lean into next week and plan to expect some traps or fake outs. There are two main scenarios that I'm going to be watching for. So the first would be a false breakdown playing out. If this breaks below 43.50, the breakdown is triggered. It would have a good shot to make it down towards the next level at 43.05. But because of the already sold nature and divergences we talked about, there'd be a pretty good chance of this turning into a false breakdown and trapping the shorts that enter in on the breakdown. Reclaiming back above 43.50 to 43.68 would trigger that false breakdown, force those breakdown shorts to cover their positions, and likely start a short squeeze rally higher. So if something like this was to play out, I'd be looking to enter long positions on a reclaim back above 43.68 after breaking below that zone to enter long positions and play that squeeze setup back to the upside. The second main scenario that I would be watching for would be something like this. Start out with a bounce next week to cool off those oversold conditions before ejecting close to that trendline backtest around 44.30 to 44.40, and after that cool off period, this could head back down and have the energy to break down and follow through towards those next levels below. As something like this plays out, I would be on the hunt for shorts on the breakdown below 43.50. So now getting into some individual trade ideas for the week ahead. The sector that interests me most into next week is the semiconductor sector, and this sector is tracked with the ETF ticker symbol SMH. So as we can see, looking at the daily chart of SMH, this failed to sustain above previous highs at about 159 and formed a head and shoulders topping pattern in the process. It ended up breaking down last week with 143.3 being the neckline and breakdown trigger, and so far it has backtested and rejected it as new resistance. So overall, this is a pretty simple setup with a well-defined pivot point at 143.3. If it holds below, I would lean bearish on the sector and can target 136, 134.25, and then the 129.6 gap fill as the next levels below. If it was to reclaim and hold back above 143.3 though, that would be a mini false breakdown trigger and likely set up a decent sized rally back to the upside. And to trade this, one could trade the SMH ETF itself or some individual stocks within it. And I have two main focuses within this sector, and the first is Nvidia, ticker NVDA, which I would focus bearish trades on if SMH holds below 143.3. So last week, Nvidia broke below this key multi-month long trendline support and has been showing increased relative weakness. If this sector sees continued downside, Nvidia will no doubt follow and actually has a good chance to lead to the downside with this technical setup. And for downside levels, you could target 400 to 402.5 and then 380 as those next levels and targets below. For the opposite though, if SMH reclaims and holds back above 143.3 and the sector sets back up for upside or a rally, I would focus my long trades on AMD stock. So AMD has set up in this 4-month long bull flag or falling wedge pattern and is now testing the major trendline support, which has held strong 3+ times when tested. This is a conviction spot to long if the sector is able to show strength back up. For the bull case, buyers would not want to see any lower than 95 to 95.5-ish, which is where the trendline support is at. And on the upside, could target 99.5 to 100, 102, and then the trendline resistance and breakout trigger slightly above there, which would likely trigger a strong upside move on a break above. So now taking a look at Tesla stock in this multi-year wedge pattern that we've been talking about for a while now, the pattern continues to get very tight close to its apex and gearing up for a large move whichever direction it ends up breaking in. Zooming in, the key levels to watch on the upside are at 260, 280, and then the long-term trendline resistance and breakout trigger, which is currently at 285 to 286. On the downside, it is nearing the 240 to 241.9 key pivot zone, and then the long-term trendline support and breakdown trigger below is currently at 231 to 233. So into next week, the main spot that I would be looking to initiate trades from is the 240 to 241.9 key pivot zone. As we can see, this has been the most well-respected area on the chart and produced strong moves when it's been tested. This could be a dip buy entry area if it holds and to play a stop loss below 240 if you do take that long trade. Or if it was to break down below that zone, this could be a short entry and play a stop loss back above 241.9. From there, you could target those initial levels above or below with a large breakout or breakdown move set up either below 231 to 233 for the breakdown or above 285 to 286 for the breakout. This will set up for a large move soon, and getting an early entry either before that breakout or breakdown will give you some extra room to let it ride for that larger upside or downside move. So that is what I'm watching for in the week ahead. I would suspect some fake outs to come from the broad market, but also some nice setups from the semiconductor sector and Tesla stock, AMD stock, and Nvidia stock. Hope you all enjoyed and thank you for watching. For anybody interested in joining the private Discord chat, that is the first link down in the description to get my personal trade alerts, nightly watch list on answering any questions you have in there. Let me know in the comments down below what stocks you guys are trading this week, and good luck. I will catch you all next time, and peace out.